This is Ryan from TrendLizard.com. We're going to take a look at Apple, AAPL, trading on the NASDAQ. It was incepted back in 1984. It was in an uptrend in its early going until about 1991, underwent a 7-year pullback, and then embarked on a massive bull market that it is still in today. In fact, I think it set a new all-time high today. So obviously that long-term uptrend is still in play. So it does not appear to be complete. It still looks to have some subdivisions to do, quite a few, before it's over. So the long-term outlook on Apple is definitely bullish. When we zoom in, it gets a little bit more confusing, but we'll do our best to make sense of it. So here's the advance. Let me step back here. This is basically the advance that began back here in 2013. It appears to be an incomplete move. It looks like it's a 5-wave advance that is still in progress. It is possible that the third wave of the 5-wave advance ended at the early 2018 high and has been in a counter-trend pullback despite today's new high. It's possible that it's still in a counter-trend pullback. It's not 100% clear yet, but hopefully it will be as time goes. So if a high was in and if a larger pullback had begun, this is what it looks like. This shows the high here where the 5 is. A larger pullback is underway, basically a wave A. Brought it down into February's low. It's given us a 3-wave recovery since then, and then it will turn back down shortly to give us a larger pullback, and can even continue to pull back in the short to midterm if this is playing out. Can't say for sure it is. Basically, the key level here that's going to dictate what's going on is 170. So if Apple trades below 170 at any point in time, it tells you that it is still in a larger pullback. That opens up the door to a move at least down to 150, potentially below there. So that is the risk of owning Apple at this time, is that it's still in a pullback that began back in January of 2018. So let's look at the other scenario here. If we take a step back and say, okay, maybe the high hasn't been recorded here. That's why a new high was set today. Maybe it's still continuing to subdivide. It's not a super clear thing. Obviously, if it was we wouldn't be talking about multiple possibilities. But let's look at this possibility as well. So if we zoom in back to this same time frame here, we see, okay, so maybe this isn't the start of a larger pullback. Maybe this is the next up leg, even though it retraced a little bit more than 61.8%. Of this up leg here, this pullback retraced a little bit more than 61.8%. Maybe it's just getting ready to launch directly from here. Once again, the key is 170, and that's what makes it a good key level. If it's going straight up from here, it will stay above 170. Obviously, that's not a super close level, but at the pace that this guy moves, it's about as close as you'll get to Apple, at least before getting some other kind of counter trend pullback here that sets up another up leg. So 170 is the key, as I'm pointing out here. There's not a ton of clarity as to whether it's heading directly higher or whether it wants to give us a larger counter trend pullback, and that's largely due to just a little bit of lack of clarity in this advance off the 2016 low. It's just not clear if it's complete or not. It certainly could count complete as indicated, but it's hard to say, especially when it just gave us a quick pullback and is trying to launch higher again right away. So use 170 as your pivot point. If it's staying above there, you want to be bullish. If it's below, you know that a larger pullback is at hand. I hope that's helpful. We'll get to one more ETF in just a moment. Thanks.